Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. The last day of the month in terms of expiry, the massive recovery that we've seen from the lows as well, that continues to remain the focus point. Last 1 hour of trade, very important to see whether we continue with that recovery or we see a further fall.
That's right. So just a couple of hours to go as far as this month's F&O expiry is concerned. And also one thing that traders will be watching out for will be the kind of roll activity, especially towards the end of the trading session today. But we have a lot lined up on the show. Midcaps under pressure. So let's start off with the top headlines. The overhang of tariffs and floods in North India cast a shadow, but the market is off its opening lows. IT and Realty are the big drags, while consumer durables and metals eke out some gains.
Indigo Airlines co-founder Rakesh Gangwal and family likely offloaded a smaller than intended 3.1% stake, but the reason for trimming the deal size is unclear. Gangwal's spectacular exit trend stands out.
Dr. Agarwal's eye hospital has tanked in trade after they approved a scheme of amalgamation with its listed parent, Dr. Agarwal's Healthcare. The merger is expected to streamline operations of both companies.
SBI Card is under pressure after Jeffrey flags industry credit card spending growth moderated to 12% on a month-on-month basis, which is the lowest since March 25.
Well, welcome to Midcap Radar. Like we mentioned, what's essentially transpired in the last hour is we did see quite a bit of a sharp recovery from the intraday lows post 10 a.m. But what's essentially transpired is that we have seen selling pressure intensify, especially in the last hour of the session. What's happened? The FMCG pack, something that lent support a couple of days ago, today that is seeing quite a bit of selling pressure going into expiry. So the FMCG pack now near the day's lowest points, names like Marico, names like HUL, all of these stocks under pressure. What's also seeing significant selling pressure, and in fact, one of the biggest laggards in this particular F&O series has been some of the capital market themes. So a name like Angel One, that particular stock continues to witness selling pressure, and this continues for successive trading sessions. Angel One today down 3%, but if you see it over a prolonged period of time, this particular stock has seen significant selling pressure emerge. The other set of stocks that are seeing selling pressure, of course, is the entire retail theme. So names like Trent, again, are under a bit of pressure, but ABFRL, we spoke about this particular name a couple of weeks ago post an analyst meet, but ABFRL today now down almost 4% lower, and the entire Realty pack, something we alluded to earlier today, that pack continues to witness selling pressure. Names like Lodha, names like, look at it, the Nifty Realty Index down almost 1.7. Lodha continues to witness selling pressure. But this is a special segment, Midcap Movers. Sonal has walked across to the wall to take us through the midcaps that are moving around in the session.
Well, a long list. Let me talk about the big movers in the mid-cap space. That index has come off from the highs of the day as well. First, on the ones which are gaining in trade. Vardhman Textiles, the textile sector was under pressure, but there's some comeback there. We do have Advanced Enzymes, which is up 6.5%. Timex is the one which is up 4%. MSTC up around 6%. And we do have SMS Pharmaceuticals as well, which is up around 3.5% in trade as we speak. On the flip side, we have big losses coming in as well. We mentioned that in the headline as well. Dr. Agarwal's Eye Hospital and Healthcare. Both of them are lower in trade. However, remember Dr. Agarwal's Health, that particular stock has recovered around 6 to 7% from the lows of the day as well. Down just 6.5% right now. Camlin Fine is the other one which has been locked in lower circuit for the longest time. IFGL Refractories is the other one which is down around 5%. All these stocks buzzing on huge volume. So we just thought we'll talk about that and we'll talk about some of them in greater detail as well.
Well, thank you so much, Sonal, for joining us, highlighting some of the movers, or the bizarre movers, if you could call them, in the broader end of the markets. Well, moving on, Rachna Vaidya, research analyst, now joins us for a quick technical check on the market. Thank you so much, Rachna, for joining us. Well, what are you making of the markets at current levels? Every time, the Nifty tries to make a move upwards, we are essentially seeing selling pressure emerge. Where do you see markets headed from here on?
Yes, good afternoon. And as far as the overall index or the market is concerned, well, I believe that we'll be turning positive only when we start closing about 25,100 on September futures, that is, and not before that. Till the time we cross and start closing about 25,100, even if we see a rally, those rallies would be probably used for shorting and creating fresh short positions on the futures. and even in options. So any move on the upside till 25,100 is only a relief rally, or rather an invitation to create a fresh short. And we turn positive only above this threshold level and not before that.
Okay, all right. So that's on the Nifty levels. The index has come off from the highs of the day. Rashna, what about individual names?
Yeah, as far as individual names are concerned, well, we'll try to remain on the short side only because the overall market is very strongly biased towards the short side. And individual names include names like Eternal and names like HDFC AMC, wherein the futures can be shorted. Even as I speak, the fresh lows for the day are being created. Now, obviously, because we've been falling very sharply ever since morning first opening tick, so the risk-reward ratio may favor you only if you wait for a minor rally and then create a fresh short if you're creating it now. But nevertheless, on Eternal, say for example, if you see a rally towards 319 or 320, then maybe you can again try to create a short with a stop loss of 322. And in that case, your target would be again 317 and 315 for a day or two of time period. And similarly, if I talk about HDFC AMC, here also fresh lows are being created. Here you can outrightly also go short at this point in time. We are at 5650 approximately in futures. If you keep your stop loss at 5690, then maybe your target on the downside could be as low as 5620 and even 5600 by tomorrow.
Okay, thank you so much, Rashna. So, two sell calls from your end today, HDFC AMC as well as Eternal. What we'll do now is we'll quickly slip into a short break. Even as market sees further selling pressure, we'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Well, it's the mid-cap side of things which are underperforming the benchmarks currently. We do have the Realty index which is under pressure. The small caps also down 1% as we speak, and it has just been on the declining trend as well. Even Nifty Realty is at the day's low. The small cap index has seen a further cut. So yes, we did see that recovery, but it is quickly getting sold on to as well. In terms of movers in individual names, we do have the likes of Lakshmi Organic, which is under pressure. Apex Frozen Foods is down 5%. Rallis India has seen a further cut of around 4.5%. There is Sharda Cropchem, which is down 3.5%. So a lot of stocks which are inching towards the day's low after already seeing a cut from this opening levels. But Texmaco Rail, it formed a 49:51 JV with RVNL for manufacturing and maintenance of freight and passenger rolling stock. We spoke to Sudeepta Mukherjee, Managing Director at Texmaco Rail and Engineering, and Manish Agrawal, who is the Principal Executive Director, Mechanical at RVNL.
You have to check, run it through from the context that the infrastructure related story or the India growth story, that is one which is a big context. And of course, globally also we find the same similar momentum in certain geographies in the present situation, that nobody is able to ignore the very part of infrastructure and making it more capable for the geographies. So we both play a significant role in our own capability in the domain. But when you talk about scale and reaching to newer markets, so this JV is kind of a association which will hold a tremendous potential to unleash further new markets in terms of having more capability and putting it forward for the new India. And that's why we want to define it that it's a very unique public-private initiative.
See, this JV partnership has been envisaged to leverage the core strength of both the companies. Rail Vikas Nigam Limited, as you know, has been in the forefront of providing the railway infrastructure, and now recently we have branched out to other areas as well. Coming to the revenue part, our initial target is about 5,000 crores, but we have not spelled a very definitive timeline because the company is still in the formative stage. We are looking at various areas as mentioned by Mr. Mukherjee also, which includes locomotives and rolling stock consisting of both freight as well as the passenger mobility. So we are quite hopeful that once the ball starts rolling, we will have adequate business under our belt to gradually transform and increase our revenue.
Well, a very interesting JV there with RVNL is what Texmaco Rail and RVNL are saying. It'll be interesting to see the prospects of that particular JV going forward. We'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Mid-Cap Radar. Well, one of the reasons the market is under pressure is the fact that 50% tariffs on India have kicked in. What is the impact of these tariffs on various sectors? Hormaz joins in to give us more details.
Well, the tariff drama has now taken another step with that additional 25% levy on Indian exports taking effect from yesterday morning. And with this, now the total tariff levy has now become 50% on all Indian exports to the US, barring, of course, those that are exempt. Of course, there is an impact now on these tariffs because of this. Now, almost $86.2 billion worth of exports to the US, of which almost 66% of them, or around $60 billion worth of exports, get impacted, and that is according to the GTRI. Now, as per CNBC-TV18 survey, in case these 50% tariffs stay for the remainder of FY26, India's GDP growth is likely to be hit by 1% overall, and for the remainder of the year, that hit is seen at around 0.5%. However, on the flip side, economists believe that the rationalization of GST rates, potentially that is slated for next month, that could offset some of that impact, as consumption would take some boost, and that could offset some of that impact. Now, as per the survey, SBI economists are expecting a 20 to 30 basis points hit to the GDP, and Goldman Sachs is worried that in case these 50% tariffs stay for the rest of the year, that GDP growth of India could fall below 6%. In addition to that, the current account deficit of India, which is currently at minimal levels, could also increase to anywhere between 1.2 to 1.5% of GDP from the current 0.7 to 0.8%. And there is also a worry that the rupee, which is also trading at record low levels, could see further pressure and can even slip below the mark of 88 in comparison to the US dollar. Now, if you take a look at the sectors that are having a significant exposure to the US market, and that will have a bigger hit because of these tariffs, take a look at this. The textile sector has 30 to 70% of their revenues coming from the US market, say for companies like Gokaldas or Indocount or Wellspun Living. Most of these companies get almost 2/3 of their top line from the US market. The seafood exporters, be it the Avanti Feeds and the Apex Frozen Foods of the kinds, they get also 50 to 60% of their top line from the US markets. And the gems and jewelry segment, most of that impact is on the unlisted space. But we spoke to the council earlier, and they mentioned that the US market is a huge one for them, almost to the tune of $9 to $10 billion. He also spoke to specific companies like Pearl Global yesterday, and they mentioned that the companies that they are dealing with in the US are asking for discounts of anywhere up to 15 to 20% to nullify the impact of these tariffs. Either that, or they are asking the companies to shift production to other countries to offset that tariff impact. They also mentioned that half of their garments business is dependent on the US markets, and in case the tariffs do remain at a steep level, that could force a $6 billion shift in exports and endanger jobs worth lakhs. Now, the impact on stocks, of course, has been felt ever since these tariff threats came into play. Take a look at the stocks, the textile names, Gokaldas, Wellspun Living, Indocount down anywhere between 15 to 20%. The shrimp feed names as well down anywhere between 10 to 12%. They are facing some pressure in today's session as well, despite some of the recovery that has come in from the lows of the day. So most of this reaction was already being factored in from almost a month earlier. As we highlighted earlier, the gems and jewelry reaction is mostly in the unlisted market. Diamond hubs like Surat may see an impact, and the GJEPC also mentioned that the industry cannot work with a 50% tariff, especially considering the size of exports that they have to the US market. Now, indirectly, the impact that could be faced if these tariffs stay for too long, barring these sectors, you could see potential job losses. The job that could result in loss of income, and a loss of income could also mean an impact on consumption, despite the potential GST rationalization that is likely to take place next month. And if that is so, the consumption rally that has taken place over the last week or two, that could be put to test, particularly because we are right on the cusp of the festive season starting in the country. Now, there is another sector that could face an impact, and that is the banks. The Nifty bank index is down almost 1,300 to 1,500 points in the last 3 to 4 trading sessions. Why are they worried? Because the exposure to the tariff affected sectors, the industry could seek easier repayment terms in case of something like this that happens for the tariff hit sectors. And some banks have already seen asset quality pressure in the first quarter, and that could have a further impact going into the future quarters ahead. And that is why the Nifty bank has been an underperformer, and as a result of which it has had an impact on the Nifty as well. So a step forward, 50% tariffs taking into effect. Most of it still sees as a negotiation tactic, but it will be interesting to see who budges first in these developments.
All right, makes sense. Thank you so much, Hormus, for joining us with that. In fact, Ritu also joins in to decode how 50% US tariffs will impact the banking sector and how vulnerable are these banks. Ritu?
Well, Sonal, a very happy birthday to you first. And yes, of course, these higher tariffs are going to test the resilience of India's exporters. So we try to look at how exposed the banking system really is and if there is a cause of concern on the asset quality front, which Hormuz was also just pointing out, which you started to see from the first quarter. Now, first, according to highly placed sources we spoke to that have a view of the sector, the exposure to sectors that will get impacted is not too significant. Of course, there are individual businesses in certain sectors that will have a disproportionate impact, but it is an evolving situation. And for now, all the banks are in the process of individually conducting an impact assessment to see how higher tariffs will impact them. But broadly, if you look at the sectoral exposure, the total exposure to some of the tariff-hit sectors is about, say, 2.8 lakh crores when it comes to textiles, 2.2 lakh crores in food processing alone, about 89,000 crores to gems and jewelry. Now, these seem large, but keep in mind, these are not concentrated solely to export-linked borrowers. Those that actually get impacted will be a much smaller subset of this overall figure. But importantly, if you look at a systemic risk survey, interestingly, that was conducted by RBI in May, although before the 50% tariff announcement, it shows that most experts expect only a moderate fallout. For instance, 72% of the respondents to RBI survey said the trade tensions and protectionist policies will have a moderate impact on overall financial stability. On the asset quality front for banks, nearly 88% do expect deterioration, but to be limited to sector-specific issues, and only 4% expect a significant rise in bad loans. Still, there are certain industries that are vulnerable we need to watch out for. For instance, 80% of the respondents said export-dependent manufacturing, your textiles, garments, electronics, along with MSMEs in export clusters, you should watch out for. So in short, while exporters do face challenges from these higher tariffs, the banking system as a whole appears well cushioned, and the risks that we will see will be contained to specific sectors.
Well, thank you so much, Ritu, for joining us and giving us a sense of how exactly tariffs are unlikely to impact the banking sector in a major manner. Thank you so much once again. But moving on, government sources say the Indian economy will be able to absorb the impact through export diversification measures and trade deals with EFTA, UK, and possible trade deals with the European Union. Parikshit caught up with Sudarshan Venu, Chairman and MD of TVS Motor, to discuss the US tariff impact on India's manufacturing industry and specifically the auto sector.
I think TVS Motors focuses on 2- and 3-wheelers. So as far as this industry is concerned, 3 of the top 5 players by volume are Indian companies. In Africa, some parts of Latin America, you see a lot of vehicles from Bajaj, from us, and from others as well. So I think we are a globally competitive industry where customers across the world and in many countries see value for our products, particularly in emerging markets. There's good market share of Indian 2-wheelers. So I think there are many opportunities both in the fastest growing large economy here in India and also in many of these countries where we have a good presence and where there is a lot of growth in the industry.
Right. Overall, as the Finance Ministry in its economic review has also said that there is a secondary and tertiary impact of tariffs that will be seen. The uncertainty impacts business confidence. Do you see certain impact on TVS Motor Company and its growth plans?
I think TVS Motor Company's growth plans are intact. Our presence is in India, of course, and in many emerging markets where there is structural growth. There is growth in demand among the middle class for 2-wheelers. There are attractive launches, including one today and some recently in the past and also in the future from TVS. And I think all this means that TVS is well positioned to continue on its journey, and we're very excited about this.
Right. How do you think India can emerge stronger? Because it is being said by a number of people that now is the time for reforms. What would be your recommendation and how India can use this opportunity?
I think the government has taken a lot of steps to improve market access to EU, to UK, to Switzerland, to Australia, to UAE, and to many other countries. There is also robust exports in some sectors like ours towards Latin America, Africa, and the Middle East. So all these, I think, along with, of course, the robust growth in demand in India itself, are opportunities to capitalize on.
All right, that's the word coming in from TVS Motors. But before we wrap on the show, the Nifty at 175 points cut that we are seeing right now. It is closer to the day's low. We have the mid-caps which are underperforming, almost 1% gone there. Bank Nifty too, batting it for the bears today. So that index is down 1% as well. In terms of stock-specific move, a lot of them in the broader markets. But particularly in the Nifty pack, let's talk about that today because it's a big cut that we're seeing. We do have Eternal, which is seeing a cut from the highs. There's Asian Paints, M&M. Vivek did speak about the FMCG index overall, seeing that cut from the highs. All these names are at the day's low. We do have ONGC, Trent, ICICI Bank, Kotak Mahindra Bank. All these stocks are at the day's low. So yes, some pressure coming by in the Nifty, and it's courtesy Bank Nifty, which is putting that pressure that we are seeing. But we'll take your leave on this edition of Mid Cap Radar, MF Corner, when we return.